Today, the market saw a lot of uncertainty and choppy price action. About 2 hours into New York session, we had US data that caused this to happen. So in this video, I'm going to break down how I was able to understand the data, how I knew it was going to happen to the markets, and how I ended the day in profit regardless of messy markets. Trading while high impact data is being released can be really risky, especially if you don't know what the data means for the markets or how it can impact this. Because of this, most traders just tend to either, number one, ignore that the data is coming out completely, or just choose not to pay attention to it at all. Well, in my experience, it's actually more risky to not pay attention to the data or not understand the data. Just because a trader chooses not to understand the data because maybe it's overcomplicated or confusing, or they think it doesn't matter, doesn't mean the markets won't react to it. I learned really early in my trading career that if I want to stay in this game for the long term, I need to learn what's moving the markets and why. So here's how I'm going to break down what happened in the markets today. First, we're going to cover what the data even means. Then I'm going to show you how I was able to read the data and determine that it was mixed. You're going to see how the markets reacted when the data was released. And finally, I'll break down the exact trade that I took and how I was able to manage it in these choppy markets. The data that was released is called S&P Purchasing Managers Index, also known as PMI. So from here on out, I'll be referring to it as PMI data. Now, you can think of PMI as a monthly health check for businesses. This is released monthly. And when we take a look at the numbers, PMI is measured on a scale of 0 up to 100. And if we take a look at the numbers here, anything above 50 is considered to be an indication of a growing business. Anything exactly at 50 is considered to be steady or basically no change from last month, right? A business that's just not really growing, not really doing anything else. And then below 50 is considered to be a shrinking business, or also an indication of a slowing down economy, right? So that's what PMI measures. PMI is based on a survey that comes from managers in both manufacturing and services industries. These managers report things like employment, orders, and production are either increasing, decreasing, or staying the same. Investors and traders like to watch PMI closely because it gives us a quick snapshot of how the economy is looking right now and potentially where it's going to be in the future. So now that we have a basic understanding of what PMI is, let's take it to the charts. We'll look at how the data came out, how the markets reacted, and the trades that I was able to take after this data. Right here, you can see my economic calendar. And if we look at this top one, this is S&P PMI data, right? Manufacturing PMI. That's what this little MFG stands for. So we'll break down these pieces of data as thoroughly as I can. You can see this Reuters poll. This is actually, you can also, if you look at like Forex Factory, it's also called the forecast. So this is what the markets were expecting, 51.7. And then the actual, we can see here, came out at 49.8. So this came out lower. Now, if we take a look here at the services PMI, we can see that the expectation was 50.8 and the actual was 54.3. So if you guys don't know what this is, we see this little lightning bolt here on both of these. This is what indicates that the data was a surprise. Now, what that means is, and a lot of times you're not going to see this if you're looking on free economic calendars like Forex Factory. This calendar here, because I get this question a lot, this is a news terminal that it's not cheap and I pay for this data. But the cool thing is that I get what's called the minimum and max on the data, right? So I get a range. This is how data is actually calculated. You don't see an actual piece of data that's just the markets are expecting 51.7. It's actually a range of numbers. So if I was to click in, I'll show you this real quick. When I click into this number, you can see that the bottom here, 50.5, and then you see this number at the top says 53.0. But the medium, the middle, the average, you have all of these voters here, right? So this is what the PMI number is expected. And then the bottom number here, this is the number of voters. It says down here, number of forecasters that I'm circling right there. So if I hover over, you can actually see the number, the people, or the banks, the funds that are actually voting or forecasting these numbers, right? So we won't go too deep into this, but it's still really cool to see. Now, this lightning bolt, like I was talking about, this is what tells us it's a surprise. So we have PMI data, manufacturing and services PMI. These are both something that is going to tell us whether the economy is growing or shrinking, one in the manufacturing industry, one in the services industry. And now we just had one, not only did it come out lower, it came out with a surprise lower, right? Because look, you can see the minimum here is 50.5, but it came out at 49.8. That's why it's considered a surprise. It came out below the minimum. And then you have the exact opposite for services. You have a surprise 54.3, but the max was 52. So when you have one piece of data telling us, hey, we're growing, the economy is growing, and you have another piece of data telling us, hey, the economy is shrinking, this is what I would consider to be mixed data. Now, to be fair, I do still put more weight on services PMI data because services makes up about 70% or more of the economy's GDP. So services is more important, but mixed data is still mixed data. We have to be very careful when I'm trading this. So after this data came out, I immediately took my hands off the mouse and was like, I'm not entering any trades because I was trading this live with hundreds of other traders. So it's not something that I take lightly. I don't like taking risky trades just because I see volume or I see something happen. I want the trades to make sense. So we'll move this off and break down what happened here on NAS. We'll go to the replay just to kind of show some of the moves here, even though you've already seen a piece of it. So this right here, 15 minutes after New York session opened, we had this breakout and we did push up. I did take some buy. I took an entry here on buys, but I closed early because the markets were still mixed and I had a really good feeling it was going to pull back. Now, the markets were super mixed when this happened. I'll show you exactly where my entry was, but if we take a look at what happened here, this in and of itself, well, let's go back one more because you can't, here's the thing, you look at all this stuff happening, I really am not a huge fan of this whole, like, everyone doing this trading view playback stuff because it looks good after the fact, but you can't see this stuff happening. Let me say that differently. You see this stuff happening in real time, it's a lot more difficult to know what's going on, right? Now, this is why understanding economic data and fundamentals and all of this stuff is very helpful, right? Because I stayed out of the trade this entire time, even when I got this pullback. Now, what I did was, when we get mixed data, I'm pretty experienced in trading data, so I've been doing it for years now. Usually, once the volatility kind of passes by, this is when I start to get back into my trades that I want to take. So I actually entered buys somewhere around here, but it was on the next candle. It's just I was watching it flip and I was watching the volatility index and everything else on NAS. So the thing is, we got this pullback. If you look down at the bottom, it's also a new hourly candle. Now for me, that's important because New York Stock Exchange opened 30 minutes ago. Then 15 minutes later, we had the data come out and the data was mixed. So you know what? I really don't like any of this. I'm going to wait. And then once the new hourly candle came, we get this aggressive pullback. So I'm happy I wasn't in these buys because even though we still hold support, you know, you want to, some people call us a break and retest. That's fine. I can still almost guarantee if anyone's in these buys here, you entered somewhere up here, when you see this candle, you're going to lose a lot of confidence in that trade. This is, for NAS, this is a pretty significant drop, right? So if we take a look at the next candle, which I kind of already showed you, you can see my entry was in the middle, of this, not the middle, it was at the bottom down here. So to give this a reference point, I can actually bring up my actual trade because I do have a screenshot of it because I sent it in my live trading group because I took this trade, took these trades live, which I do with every single trade I take. But this one, where is it? Right here. I'll go to the first screenshot. So this is exactly what I was saying. Everything I just showed you, right? That zone, you can see the mark that I had here, the zone that I had here, and you can see that I was telling them, where is it? Well, I'm watching these areas on NAS, not making any assumptions of what's going to happen today. And then this was the entry right here. So you can see exactly where my entry was sitting at that support. And I was already almost 100 ticks in profit. When it hit 100 ticks is when I went break even on this. And then if we play this out, I'll show you what the trade looked like. I'll also tell you how I managed it. But my entry was here. My stops, I think I had my stops just to give it some room to play. But realistically, if it came back into the zone, I would have closed because the markets were, we still had mixed data come out. So I'm not married to the idea of like, oh, I need to have a tight stop loss because of risk to reward. I'm going to give it some room to breathe. I'm fine with that. But I'm also not really married to holding this trade either because number one, it immediately went into profit. I'm happy with that. Number two, I'm still not too confident of what's going to happen today because the data was mixed, even though I'm still looking for buys on NAS. So we play this out a little bit. You'll see exactly what happens, right? It went right to the TP. Now I ended up closing the trade probably somewhere around here. Reason being is that the markets were just really slow. You know, after we had, this was just trading for 2 hours here. And then we had the data come out and then I waited another 15 minutes for the hourly closure, took these buys, and then it was still consolidating up here for another 45 minutes or so. I didn't want to be in it anymore. And other than that, there was really no reason. I could have realistically just been break even this entire time and held this trade. Because even as I play this out, I'm pretty sure it never, I like swing trading or intraday trading NAS buys, but I'm pretty sure it never even came back to my entry, but it is just consolidating all day, right? So even if we play this out, let's open this up a little bit on NAS. We really haven't done much. Really, really choppy price action. Like, this isn't the most ideal type of price action that you want to be in. So the fact that I can even close the day in profit and not, some people are going to be taking sells here, buys, then sells, then buys, and just calling this exhaustion or whatever, fake outs. I don't like to play that game, right? I have a bias on NAS. I understand the data was mixed. This is the trade that I'm looking to take, and that's why, right? If you want clean price action, like last week, which if you guys can see my last video, I did the sells here. This is really clean price action. The sells that I took on Friday, and even the buys that we had taken back up over here, but these sells, this is clean price action. This is easy, right? But what we're seeing today, given the fact that we had that mixed data too, this is not clean price action. It's not something I want to be in, even though I did close the day in profit. I'm happy that I was able to close the day in profit and didn't really get too messed up with this. Look at all these nasty wicks. It's really not that common for NAS to do that. So shitty price action. Choppy markets are easy to see when you're looking back at the day after it's already played out. But when I was able to anticipate when the markets are going to be choppy, mixed, or slow, this is when I went from being the trader that was always consistently giving my profits back to the markets to somebody who was consistently staying profitable every single week. And I hope this information does the same for you. If there's any other trading tips or anything you guys want to see, just comment below and let me know. I'll see you guys in the next video.